It's a new year, and this is your guide to buying a home in 2025. In today's podcast, we're going to talk about the state of the market, the current state of the market. We're going to talk about why 2025 might be the year to buy a home and where the market might go from here. We're going to talk about how 2025 might be different than 2024 was, some common mistakes that buyers may make along the way throughout the year, the cost of waiting to buy a home, and if you're ready to get started, three ways to move the process forward. So, what was the state of the market in 2024? Well, the theme of the market was flat. It was boring. It was quiet. There wasn't a lot of properties that necessarily transacted in comparison to years in the past. Towards the end of the year, we saw about 6.6 months of inventory. There was a steady climb of inventory since the beginning of the year in January, with a slight drop in October. Now, 6.6 months of inventory, that puts us towards the higher point of what's considered a balanced market, almost teetering on the edges of a buyer's market. And the conditions for a buyer's market, well, that means there's more product to choose from, and prices may be going down because properties are sitting on the market typically a little bit longer than they normally would. Now, while inventory levels could be argued that they're actually at healthy levels today and much healthier than they've been in the past, naturally, as inventory has been climbing over 2024, you can imagine that prices, well, they responded appropriately. So, as prices responded and as listings increased on the market, there was more and more opportunity for home buyers, and it was becoming more and more difficult for home sellers to actually sell their properties. One of the first reasons we got here, of course, in the first place, was just the cost of borrowing money, the cost of getting a mortgage for a home. And all of this post 2022 type stuff, where the mortgage rates really skyrocketed in 2022, particularly in the spring. But the story of 2024 wasn't skyrocketing mortgage rates. It was actually mortgage rates getting cheaper. At the beginning of the year, the prime rate from the Bank of Canada was floating in and around the 5% mark. We saw quarter point rate cuts in the months of June, July, and September of 2024, and even a half a percentage rate cut in the month of October. So money was getting cheaper, but listings were still climbing. People weren't reacting to this cheaper money because when the bank rates go down, it doesn't always impact the market immediately. It takes time for this money to start doing its thing in the economy. So, a way to sum this situation up and the environment that we were in coming out of 2024 is kind of like having a Boxing Day sale at a store that not many people visit. Think about it. There was the most selection in this store that sells homes, since there has been since 2014. And the things in this store, they went on sale. While we only saw a 1.7% drop from the months of January to November, which doesn't sound like a ton of money, that was still properties considered to be going on sale. The benchmark price of a home was about $971,000, which was a savings from the start of the year of about $16,500. So, why might 2025 be the year for you to consider buying a home? And where might the market go from here? Well, this is where we get into predictions. And I'm not going to share my own predictions about where the market might go. I'm going to let some people, maybe with a little bit better of a qualification to handle that. And this is economists. Economists are trained specifically to do this sort of thing and help forecast where they see things going. In this case, where they think the market might go in terms of housing sales and prices, not only in British Columbia, but also in Canada. This is the absolute best that we have. And these people are making educated estimates on what they think is going to happen. And of course, they can't predict things that are one offs, things that would not normally be expected, things like wars or pandemics. But if it was going to be business as usual in the year of 2025, this is what they say. The big six banks across Canada all say that quarter four of 2025 is going to range with the overnight Bank of Canada lending rate between 2% and 3%, with an average estimate between the six banks coming in at 2.375. This is obviously way lower than it is today as of the day of releasing this podcast. This sort of information is also somewhat confirmed by the British Columbia Real Estate Association, or BCREA, and their chief economist. Their chief economist, Brendan Ogmanson, who said gradual rate cuts are expected as long as inflation stays on course, and added that the Bank of Canada is on a glide path to a 2.75% rate policy. There's been lots of talk about new construction. In fact, that has absolutely been dominating the political headlines for the last few months. We need more construction, not only in the lower mainland and British Columbia, but right across Canada. Brendan goes on to say that despite recent government attempts to address BC's ongoing housing crisis, a new economic report from the British Columbia Real Estate Association indicates that the current elevated pace of construction will still be insufficient to improve affordability in the province. Now, we're going to talk a little bit more about affordability later, but what are the predictions by other organizations on where they think things might go? The Canadian Real Estate Association predicts that national sales across Canada are going to climb 6.6% in 2025, with the national average price to climb about 4.4% to $713,375 in 2025. They figure out that there will be approximately a 1.3% increase in the prices in British Columbia. Now, that's a number as a whole from the National Association, but they might not study the local markets here in British Columbia quite to the same extent that our friend Brendan at BCREA might. And here's what he had to add to that conversation. He quotes, "Following two pretty challenging years for sales, it looks like the markets across BC are starting to build momentum. In addition to lower mortgage rates, new policy changes allowing longer amortizations for first-time buyers and increased mortgage insurance caps will provide a boost to market activity. Although new listing activity has been much stronger than last year, the accumulation of inventory in 2024 had much more to do with a prolonged slump in home sales. With active listings returning to more healthy levels across BC, we expect that the market will be able to absorb a coming rise in sales activity without a sharp increase in prices. Therefore, the average price in BC is projected to rise a modest 3.3% in 2025, following flat prices in 2024." End quote. It seems that we're likely going to have much cheaper money to borrow in 2025, and we've got not only some major banks predicting that, but also the local British Columbia Real Estate Association, who is also predicting that we're going to see a modest increase of about 3.3% in prices. Now, before we get too excited about increases in prices and what might happen in 2025, we need to talk a little bit about how 2025 is going to be different than 2024. There's a ton of ways that we could absolutely take this, but there's three main topics that I think deserve to be explored a little bit further or at least brought to your attention. The first one is we have a new president coming into power in early 2025, and his name is Donald Trump. He likes to throw words around. He likes to say words like tariffs. Donald Trump is going to have a massive impact on the US economy, whether that's for the better or for the worse. And that's yet to be seen. But what happens with the US economy is also going to have an impact on the US interest rates. And Canada tends to go somewhat in lockstep with interest rates and what's happening in the US. So that's the number one thing to watch out for as of right now. Number two is the focus on new construction, not only across Canada, but more specifically here in British Columbia. And one of the biggest initiatives that we did a video on our YouTube channel that has been getting tons and tons of clicks is all about the multi-unit small scale housing initiative that has been put into municipalities across this province. There has never been a time in history where you've had both federal government and the provincial government and the municipalities working so hard to add new units for people like you to live in. That video is available on our YouTube channel if you want to check it out. This also leads us into our third piece of this little puzzle, and that's government intervention mixed with a little bit of affordability. Let me explain. The BC NDP, who recently got back into power, vowed to help middle income homebuyers by providing them with up to 40% of the financing for their property, which is very clearly going to help fuel demand for housing all across British Columbia. The plan commits 1.29 billion to financing and supporting development of up to 25,000 new homes over 5 years. These are three pretty major things at play. And of course, no one can predict how it's going to work out, but they're definitely things that if you're thinking of buying in 2025 or at least considering it, you're going to want to pay attention to how each of those affect what happens with the real estate market. But now I want to dive into some pretty common mistakes I think most home buyers are going to make in 2025 that's probably not going to serve their interests quite as well as they would hope. The first is waiting for mortgage rates to come down versus the market getting more expensive. Take your average, let's say $900,000 townhome in the city of Surrey. BC REA predicts that prices will be up roughly about 3.3% in quarter four of 2025 by the end of the year, meaning that that $900,000 townhome today is going to be worth approximately $930,000 by the end of the year, an increase of $30,000. They think that the mortgage rates are going to keep coming down, but these likely aren't the mortgage rates that people need to be focused on. Let me explain further, which leads us into point number two. Thinking that fixed mortgage rates will go lower as the Bank of Canada lowers their overnight lending rate. Fixed mortgage rates in Canada are primarily influenced by bond yields, particularly the 5-year government bonds, rather than the Bank of Canada's overnight rate. Bond yields depend on market forces like inflation expectations, global economic trends, and investor sentiment, which may not align with the changes to the overnight rate. As a result, a lower overnight rate does not necessarily lead to lower fixed mortgage rates, the type of mortgage that most home buyers prefer. And currently, as of the day of recording this, variable rate mortgages are considerably higher than fixed rates because of the discounts of where the market is likely headed are already baked into those fixed mortgage rate prices being offered. So, while you may see the variable rate mortgages take a significant decline over time, the fixed mortgage rates are going to be a lot more sticky moving forward. The third mistake that most home buyers are likely going to make is thinking all of the government attention on new construction is going to fix the housing market overnight and add a ton of supply to the market, bringing prices down. This, unfortunately, is not the case. Despite recent government attempts to address BC's ongoing housing crisis, a new economic report from the British Columbia Real Estate Association indicates that even the current elevated pace of construction will be insufficient to improve affordability in the province. According to the latest BC REA Market Intelligence report, moving the needle of affordability and meeting the province's housing targets will require much more aggressive reforms. Rather than me explain this a little bit further, let me provide you with a snippet of the chief economist at BC REA explain this in better detail. Here he is. And I quote, "To build housing, we need a few inputs. We need people to do the on site work. We need equipment like cranes, and we need gains in efficiency from technology and better processes, something economists call multi factor productivity. That will allow us to build more units faster and at a lower cost. Right now, we estimate that the long run capacity for housing starts is somewhere around 45,000 starts per year. That's high by historical standards, but probably still too low to make a difference to affordability over the long term. In fact, if we don't expand new supply, it's really hard to see affordability improving. Even if we have a decade of markets in balance with no acceleration in price, just slow and steady growth, affordability will stay at current levels or even further deteriorate, which means finding adequate housing will be very difficult, especially for young people in BC." End quote. This leads us into the cost of waiting to buy a home, and this isn't going to be pretty. We know that people have gained massive equity over the last few years, especially over the last 10 years in British Columbia real estate, just based on the demand for that real estate. And we can't accurately say whether the future is going to be anything in resemblance to the past. But these numbers are important because these numbers reflect people who waited to get into the housing market and continuously were content with the idea that the market was going to crash. From January 2014 to January 2024, all prices of combined real estate, according to the Home Price Index, over that course of the 10 years were up $544,400. That is an increase of $54,440 per year, averaging an increase of $4,536 each and every month. That's right. Over the last 10 years, the average price of real estate has increased at a rate of almost $4,500 per month. And there's more to that story. Back in January 2014, the discounted mortgage rate was 5.24%. If you had signed a 5-year mortgage and renewed in 2019 at the rate of the time of 4.29 and had carried that mortgage for an additional 5 years into January of 2024, this is what would have happened. At the time, in January 2014, the average benchmark price of a home in the Fraser Valley was about $443,800. But why am I telling you about mortgage rates? That's not at all what I'm doing. What I'm talking about right now is the importance of time in the market. Let's assume that you signed a 25-year mortgage at the time in 2014, and at this point, you would be 10 years ahead with that mortgage. But there's more to those numbers that I want you to understand. In the course of those 10 years, while you're paying your mortgage, you would have paid a total interest of approximately $169,015. That's assuming there was no change in the property's value. Over the course of that 10 years, the total principal paid, or explained differently, the amount of equity or money added into your mortgage or your bank account of your home would have been approximately $106,861. So you would have paid $169,000 in interest, but almost $106,000 would have been added to your equity just by strictly paying your mortgage over the last 10 years. That's $106,000, which really helps offset any of the money that you would have put towards your interest while you were carrying that mortgage. And it's important to note that over the life of the mortgage, more of each payment goes towards the equity of your home rather than the interest as the principal balance decreases. This means that although it wasn't a complete wash, it only cost roughly $69,000 over a 10-year period or $6,900 per year to live in a home, which obviously doesn't include maintenance or upkeep. But $6,900 per year is a pretty good deal. So not only did it cost only $6,900 over the course of that 10 years, but we also do have to account for the gains in equity based on the changes in property value. The key takeaway from this is the person who decided to act and get into the market in 2014 didn't just grow their wealth through the increase of the property's value, but they also helped offset their mortgage. And if they've got a 25-year mortgage and bought 10 years ago, well, they've only got 15 years left on that mortgage until they no longer have any payments. They would be mortgage free in just 15 short years. So now that you know the state of the market and what to watch out for in 2025 and all of the things that go into having to make a decision, like whether you should actually invest in the real estate market and buy your next home or your first home, well, there's really three ways to get started. The first way, well, of course, you can reach out to me and my team. In fact, you can book a call with us by checking out the notes in this podcast below, which is located in the description. And you can let us know about your plans and your goals, and we'll help give you advice to set you off on the right path and make sure you can get done what you need to do in the best possible way. Number two, if you're not quite ready to reach out yet and you want to do some more investigations, part of those investigations is you want to understand what kind of current incentives are going to be available to people like you buying a home in 2025. These could be things like the increased property transfer tax exemption thresholds, the federal home buyers plan, the ability to now do 30-year mortgages, and the list goes on. And this is where you would want to download our PDF about 21 grants and incentives available to home buyers and home owners, which is also available for download in the show notes. But maybe you're listening to this late at night, or you're just so excited to get started. There actually is a third way to get the ball rolling so you can get started as quickly as you humanly want. And that's where I'm going to encourage you to jump over to our YouTube channel to check out the video that we published on New Year's Day, which is the exact presentation that we give to home buyers to get them set up for success when they want to buy their next home or their first home. You're definitely going to want to check this out because it is loaded with valuable gold for anybody like you looking to buy a home. I want to thank you for listening to today's podcast, and we'll definitely look forward to catching up with you on the next show. Take care.